Right from our childhood days, the most interesting habit that we ever inculcated is a piggy bank. Now, one thing in India again which I would like to mention is that 90% of the Indians are risk averse. The ideology is that is only used for a transaction perspective, that is not used for a long-term perspective. Bank is going to get a fixed amount of money from n number of customers, that is from the depositor, on a regular basis. Good morning and welcome to the third session of Management of Banking and Insurance Services. This is a very interesting session where we are going to talk about one of the most important function called as rising of funds through deposit schemes. So what is this rising of funds all about? Do banks have to raise funds? Because we believe that bank itself is a repository of funds. It has got enough money than anybody else has. But right now, we are looking for rising of funds. So let us see what is the session all about in terms of rising of funds. Moving forward, now there are many saving schemes which are being created by the bank for an investment purpose altogether. And that is how you can go and tell the customer, especially for the Indian citizens, that has been launched by the government as well as by the bank in order to attract, in order to indicate them saying that, sir, your hard-earned money should never go waste. But then, most of the people in India still do not have the trust and favor of just going towards the bank and depositing money, because they feel that that becomes a deadlock situation altogether. Now, most of the time what happens is that, sir, I go to a bank and I deposit the money altogether and I'm not going to get back anything in return until that fixed period of time gets over. So now what happens in the mind of the consumer is that, why don't I start finding an alternative for my deposits, for my money, or for my investment purpose altogether? So what runs at the back of my mind? What runs in my ideology altogether? What is that? Is these saving schemes that have been, I try to look upon different factors which gives me the attractive rate of interest. That is very important when I talk about the Indian context altogether. If I'm not getting that attractive rate of interest, then I'm not being interested in banks at all. But for the banks here, now let me talk on the behalf of the banks for a while. For the banks, it is not that easy to float a scheme just because they want to take that money inside. It becomes the responsibility and a due liability for the banks once they start accepting deposits from the customer. Because tomorrow at any point, the customer can come back and say that, please give me back my money. And that too, you have to give back with a particular rate of interest as promised. So that is why banks have to think twice, thrice, or probably 10 times before floating a scheme altogether. So what we try to do here is that we have to give an incentive in place to the customers so that they can come forward and deposit money back to the bank. So what does the bank do? The bank comes up with innovative interest rates, innovative ideas, where they start promoting certain functionalities like giving you a free credit card, a debit card, or a demat account, or they give you subsidized rate on gold loans, or they give you some kind of freebies altogether so that you are able to start coming into the bank's hold and you are able to deposit money there. Now, what is happening here is that we are trying to connect an emotional hold of the customer towards the banking mentality altogether. Now, what is that emotional hold that we are talking about? Right from our childhood days, the most interesting habit that we ever inculcated is a piggy bank called as a savings bank. Every time when you received a coin from your father, grandfather, or from your uncle or aunt, anybody, we used to take that money, that little money, and put it inside that piggy bank. That was very interesting to listen to the clinkering noise of that coins. Because we always used to feel that yes, we are saving money. One day that piggy bank will go into the size of an elephant and we will have huge amount of money for our own spending, for our own expenditure. But then the ideology behind that was not to multiply money just like that, but the ideology was to inculcate the habit of savings. Because our elders always used to tell to us, money today is more valuable than for tomorrow. For example, today you have 10 rupees. The value of 10 rupees tomorrow might come down, but then the need for 10 rupees will definitely be there. So if you save money tomorrow, you will have a better tomorrow. So that is why we started getting into the habit of savings altogether. We started getting into the habits of, in terms of making money for ourselves. Now, banks also understood this psychology. Banks also understood this phenomenon altogether, and they started saying that let us also promote saving schemes. Let us also start promoting ideologies that will go ahead and help people to spend money to save that entire factors into the banking phenomenon, earn more deposit, create more capital for themselves. So this is the way to increase the inflow of money into the Indian economy. Why? Because tomorrow when banks are able to collect more and more money from the consumer, then automatically they will be able to get a better hold. They will be able to sustain themselves with higher liquidity. Now, moving forward, the tax savings fixed deposit. Now, the one thing in India that people never like to talk about, or people feel that it is quite, irritating to talk about, is the word called as tax. Probably, tax is a word which is not completely understood by every single individual. Why? Because they come back asking this question, sir, my income itself is so low, why should I pay a tax on that income? What is this income tax all about? I am working hard, I am doing my work, and why should I pay the government for it? But let's not get into that argument right now. Let's try to understand how to save tax. So when you go and tell people that you will be able to save the tax money, you will be able to save that extra paying to the government, people are interested. People want to show that, yes, I also want to do that particular kind of activity which will save me from giving it to the government. So that's why we bring in the tax saving fixed deposits altogether. The tax saving fixed deposits are suitable for investors looking for lower risk and a fixed guarantee return for a long-term basis. Now, one thing in India again which I would like to mention is that 90% of the Indians are risk averse. If you go and tell them that there is a risk involved in doing a particular activity, we step back. Now, why is that? Because we never want to take risk and make money. We want to make money by avoiding risk. So that is why the tax deposit schemes that were bought in India were particularly developed keeping in mind the consumer. We always go with the consumer's mindset, saying that if the consumer is happy, the consumer is able to get a return. We are able to convince the consumer saying that, sir, you are going to save an X amount of money more by opening this deposit. You are going to get an extra 0.5% or 1% interest by opening this deposit. Everybody will be interested. That is why we bring in all this deposit scheme. And especially when we talk about this tax saving deposit scheme altogether, our ideology is that we look for a customer who is typically risk averse and he wants the fixed return of money with a long-term guarantee. So he is ready. He'll say that, yes, sir, I will put 5 lakhs or 10 lakhs or 1 lakh into a fixed deposit, retain it for the next 5 years or 10 years without any risk factor attaching to it, and please provide me back with a fixed rate of interest. That is why it gets really interesting when we talk about this tax deposit saving funds. Now, the deposit made is allowed as a deduction under Section 80C up to 1.5 lakh. Yes, the government also knows that there is a limitation for it, or else what people will tend to do is that put all the money back into this tax saving deposit and say that, sir, it is nil tax. So what does the government do smartly is that the government says that only up to 1.5 lakh you can make this deposit, beyond which it is not worth enough. So after that, let's say you have invested 50,000 rupees and your total income is taxed at 20% tax slab rate. A deduction of 10,000 from that 50,000 rupees is made, so you will be calculated only for 40,000 rupees. Now let's not get into the calculation too much, but let us try to understand this factor that the bank is now creating a win-win situation between the customer and the bank itself. Why? Because one side, the customer is getting excited by opening a tax saving deposit scheme, which is saving him from tax and also a guaranteed return. The other side, the bank is able to raise a fund from the customer because it is trying to now accept deposits on the long run. So this is one of the way how the bank will be able to generate money back. Moving forward, we are now going to talk about the savings bank account, one of the most interested form of the banking altogether. Why? Because right from the beginning, when the banking started in India, this word itself is very, very attractive. Savings altogether. How much did you save last year? How much did you save in the last 10 years? When people ask you this question, it is quite puzzling. It's quite amazing. Why? Because we are not able to give the answer in the correct form. Neither we are interested to give the actual figures. But then, deep back into the mind, we always think about this savings. So it is always suitable for people who have a definite income and are looking to save money more. So every time when you save a 10 rupees into your bank account, you are getting excited by the fact that, yes, I have done something more for tomorrow. So next month, if you are able to save 20 rupees, that is even more excitement for the consumer. So what is the savings account doing is that it is trying to inculcate an habit inside you by making you feel more excited for the amount of deposit that you are doing. So every time when you are depositing more and more money into your account, that is becoming a factor of savings that will definitely help you to save a better tomorrow. So this is one kind of a deposit, or this is one kind of a repository which I would like to talk about from a banking perspective, which will make the customers believe on the factor that yes, he is able to save more money. So this is the way bank will attract the customers and say, sir, please open a savings bank account with us. Now I would like to give you the example of IDFC Capital First, which first came up by saying that, sir, you will get a 7% interest on savings account. And there are many banks like that. I can talk about RBL, Ratnakar Bank Limited altogether, which says that they will be able to give you about 6%. Bandhan Bank, which gives you about 6%. There are a lot of people like this who are ready to give you a 6 to 7% on savings. Now, this is becoming interesting. Why? Because the more I save, the more the percentage will get added to it. So this becomes a very, very interesting factor altogether. So this is one of the primary ways of attracting the customers towards the bank and earning money from them in terms of returns. Now, the current deposit account, which is very, very important. Why? Because banks open a current account for them like a savings bank account, and this account also requires a certain minimum amount of deposit altogether, which is quite evident. Why? Because while opening the account on this deposit, the bank does not pay any interest altogether, but then it creates a stimulation. It makes the holder pay a certain amount each year as an operational charge. Now, the current account factor is more from a businessman perspective, from a trader perspective altogether. Why is this true, or what is the ideology behind it? Now, when I open a current account today, the ideology is that that is only used for a transaction perspective. That is not used for a long-term perspective. So when I open a current account and when I tell people that, yes, sir, I need it for a day-to-day transaction, withdrawal, deposits, or doing some kind of activity, then I get interested into this factor. I go and tell people very, very clearly that, the current deposit account is one of the most important factor through which you can trade seamlessly, you can make your payments, and at any point of time, if you require any sort of help or belief from the bank, yes, the bank is always there to help you. But what is the bank getting in return by opening a current account? Anyway, I'm not going to pay an interest on you, but am I going to get something in return from that? The answer is a definite yes. Why? Because they are going to get some operational charges. Just by opening a current account, bank is going to get something called as service charges from the consumer. So that becomes very, very interesting factor here. The banks can come back and say that, yes, sir, since you have opened a current account with us, now this is the time for you that you repay back the amount to us, you take care of the functionalities, and you have to give it to us at any given point of time. So this is highly important. This is highly interesting for all of us to know. Why? Because sometimes when you are not able to understand the functionality of how a bank comes in, these are all the areas that you need to understand of raising funds during the long-term course of banking. Followed by the fixed deposit, a very, very known and a common factor altogether. So when we talk about this fixed deposit altogether, this type of deposit accounts allows the depositor to put in an amount, fix it for some particular day. It starts with the lowest of 15 days, 3 years, or sometimes even 5 or 10 years altogether. So you can just deposit the money for 15 days, and after 15 days again you can renew the money. After 1 month again you can renew. What we are trying to do here is that we are just trying to put this money back into picture and play as far as possible. Now, a fixed deposit is the direct source of income for the bank. Why I would say that? That's a direct way of raising funds. The more and more the bank collects deposit, one side it is a liability, I'm not going to say deny that factor, but the other side, the money that is being deposited by the customer into the bank account, it is going to be again utilized by rotating it in the market altogether. Now that is going to give them a fund for operations, for doing all their exercises. So in that case, now what is going to happen is that banks will give a lower rate of interest in turn if they are not able to generate faster. But then if you're going to keep it for a longer term perspective, yes, you are going to get a constant rate of return in terms of fixed deposit. The interest on a fixed deposit account can be withdrawn at certain intervals of time. That's quite true. Why? Because suppose I deposit the money for 1 year. So after 365 days of operational activity, I can go back to the bank and say that, sir, I want to withdraw my money. Now, in case of emergencies and exigencies, you can withdraw the money as per your needs, as per your requirements altogether. But then what does the bank say here is that, suppose you are going to make an immediate withdrawal, or a withdrawal which is much more ahead of the stipulated time period, then you might have to lose out on the interest, lose out on the maturity amount altogether. But that's okay for most of the customers, because at that juncture, if they need money, they have to withdraw it. That cannot be avoided altogether. But then what is the bank going to get by fixed deposits? They are going to get the amount from the consumer. That money is again going to be taken and rotated in the market. Of course, yes, the bank is going to take the money and rotate it. That means it's going to lend it to the customers at a higher rate of interest, and they are definitely going to give a lower rate of interest to the consumers who have given deposits. Followed by the recurring deposit account. Now, I would say that the concept of recurring deposit started with the postal savings scheme. And the postal savings scheme, or the post office, were the pioneers of the recurring deposit altogether. In the short form, it used to be called as RD in India. That is called as recurring deposit. Now, the RDs were created for a short time purpose altogether, with a small objective in mind. Now, let's say that in 3 years from now or 1 year from now, I need some money for some particular function or an event that's going to happen in my home. what do I do? On that one particular day, suddenly money is not going to come out of the heaven. So what I'm going to do, I'm going to save money on a constant basis. Let's say that every month I'm going to save 2,000 rupees. So that gets added up for 1 year as 24,000 plus the interest put together. Probably I will be getting somewhere quite close to 25,000 rupees. So what happens here is that this is a kind of a saving practice that you develop in the minds of consumer. At the same time, for the bank, what is going to happen is that the bank is going to get a fixed amount of money from n number of customers, that is from the depositor, on a regular basis. So that is why banks always go and tell the customers, whatever possible, please start saving the money rather than spending the money. So when you start getting into the recurring deposit habituation altogether, what will happen in you is that you will suddenly start getting that feeling or the hold that, yes, every month I'm committed to save certain amount of money without any further questions. I would start putting that money, and at the end of the particular time period, that is where I use the word closure of account on maturity altogether, you will get back the money with interest. For the bank, how do they raise funds? They make the customers month on month basis to pay the money, and they are able to generate money out of it. So that's a very, very fantastic way of generating it altogether. Moving forward, with this, we come to the end of this session. I hope and believe that all the information shared here is of a great use and of a great resource for all of you. In the upcoming sessions, we are going to speak about the lending function in particular, how the bank lends, what is an overdraft facility, why a bank needs to look into these factors. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session today.